Assalamualaikum and very good day to everyone. So first of all, I will explain about the background of Dialog Group Berhad. Okay, first of all, Dialog Group Berhad is an integrated specialist technical services provider that was established in 1984 and headquartered in Kuala Lumpur. Dialog Group Berhad consists of 2,900 strength and have branches located in Southeast Asia, China, New Zealand, Australia, Saudi Arabia and also UAE. So Dialog Group Berhad listed on the main market of Bursa Malaysia with market capitalization approximately to 22 billion Malaysian ringgit. So the comprehensive services by Dialog are divided into three groups, which is upstream, midstream and downstream. So for example of the services provided by Dialog Group Berhad is supply base, engineering, procurement, construction and commissioning, plant maintenance and catalyst handling services, specialist products and services and etc. So the company vision is to be the top cohesive technical service contributor to the upstream, midstream and downstream sector of oil, gas and petrochemical industry in Malaysia and also globally. So for the mission is to endlessly improve the competitiveness, competency, leadership in the condition of the service provided. Okay, moving on to the next, which is financial ratio of Dialog Group Berhad in 2019. Okay, the first ratio is liquidity ratio. So there are three elements under the ratio. Okay, the first one is current ratio, where the Dialog Group Berhad has RM1.50 of current assets for every RM1 of current liabilities. So for the quick ratio, Dialog Group Berhad has RM1.43 quick asset without having reliant on their inventory for every RM1 of its current liabilities. So for the cash ratio, Dialog Group Berhad has 60 cents of cash for every RM1 in current liability. So the second ratio is efficiency or activity ratio, where there are 5 elements under this ratio, and the first one is inventory turnover. So the inventory turnover rate for Dialog Group Berhad in 2019 is 20 times. So the second is average collection period, which is the average collection period of Dialog Group Berhad in 2019 is 142 days. So the third is total asset turnover, which is Dialog Group Berhad generate 36 cents of sale in every RM1 of total assets. And the fourth one is receivable turnover, where Dialog Group Berhad collect account receivable approximately 2.6 times in 2019. And the last element for this ratio is fixed asset turnover, where Dialog Group Berhad generate 53 cents of sales in every RM1 of fixed asset. So the third ratio is leverage ratio, where there are 3 elements under this ratio. So the first element is debt ratio. So Dialog Group Berhad have a ratio of 0.42 times in 2019, which is at a reasonable risk since it is lower than 0.5. Second is debt to equity ratio. Dialog Group Berhad has 72 cents of debt for every RM1 of equity. Okay, so for the time and the last element for this ratio is the time interest earn ratio, where Dialog Group Berhad has the ratio of interest 10 times, which is 10 times greater than its interest expenses, and it can afford additional interest expenses. And the last ratio is profitability ratio, where there are 5 elements under this ratio, and the first one is gross profit margin. So for every RM1 revenue of Dialog Group Berhad in 2019, 79% will go into the cost of goods sold, while the remaining 21% is retained to pay off the expenses and also for the profit. Second is operating profit margin, where the Dialog Group Berhad has the operation ratio of 80.65%, which indicates that the cost of operation before tax and interest represent 80.65% for every 1 ringgit of sales. And the third one is net profit margin, where Dialog Group Berhad generates 0.2314 for every 1 ringgit of sales in 2019. It means that 23.14% is income for every 1 ringgit sales in 2019. And the fourth one is return on total asset, where the Dialog Group Berhad generate net earning of 8 cents for every 1 ringgit of its investment in asset, which is 8.23% of 1 ringgit investment is the net income of Dialog Group Berhad. And the last one is return on equity, which is Dialog Group Berhad generate 0.1413 cents of net income for every 1 ringgit equity provided by the shareholder. It means that for 1 ringgit of equity provided by the shareholder, 14.13% of it is a net income for the Dialog Group Berhad. So that's all from me. Thank you.
For Dialog Group Berhad's financial ratio in 2020, we have been calculated for liquidity ratio, activity ratios, leverage ratio, and profitability ratio. In liquidity ratio, we have current ratio, quick ratio, and also cash ratio. For current ratio, we get 1.69 times, means that the Dialog Group Berhad able to pay 1 ringgit and 69 cents for RM 1 ringgit of its short-term liability. Next is quick ratio. Quick ratio, it shows that the company have 1.63 times of quick ratio. For cash ratio, the company have only 0.841 times. For activity ratio, inventory turnover of the company in 2020 is 21.02 times. It means that the company is able to produce 21 ringgit and 2 cents of cost of goods sold, as with 1 ringgit investment in its inventory. Based on average collection period, the company managed to collect its receivable in 180 days. Fixed asset turnover in 2020, the firm managed to generate RM 90 cents for RM 1 ringgit investment in fixed assets. Receivable turnover ratio in 2020 is 2 times. Next, total asset turnover, the company managed to generate RM 0.32 for 1 ringgit investment in overall assets. Now we move to leverage ratio for 2020. Debt ratio of company is 40.98%, while debt to equity ratio is 0.346 times. Time interest earned of company in 2020 is 8.5091 times. Lastly, we move to profitability ratio. The gross profit margin of company in 2020 is 22.45%, while operating profit margin is. Next, we move to net profit margin of the company. Net profit margin shows that the firm is able to generate net earnings for shareholders of RM 0.1363 for each ringgit of sales. Refer to return on total assets. The company is able to generate net earnings of RM0.0437 for RM1 ringgit investment in its assets. And the last one is return on common equity. It shows that the company has 7.40% of return on common equity.
Liquidity ratio is the overall measure of the firm's ability to meet its short-term obligations. This ratio focuses on the availability of short-term assets to finance short-term obligations. There are three elements of liquidity ratio, which are current ratio, quick ratio, and cash ratio. The objective of the current ratio is to calculate the coefficient by which current assets cover short-term creditors' claims. After the computation of current ratio for year 2019 and year 2020, it can be seen that the ratio increased from 1.50 times to 1.69 times. Thus, we can conclude that Dialog Group Berhad has a better performance in year 2020 compared to year 2019, since the firm's ability to pay is 1.96 times higher than 1.50 times for RM1 of its short-term liability. As for quick ratio, the capacity of the company to pay off its short-term obligation is to be calculated without having to rely on inventory sales and prepaid. This means that the business is completely prepared with ample assets to be liquidated immediately to pay off its current liabilities. After the computation of quick ratio for year 2019 and 2020, it can be seen that both years were having a good performance with 1.43 times and 1.63 times in quick asset for every RM1 in current liabilities accordingly. But Dialog Group has a better performance in year 2020 due to its bigger ability to pay off the short-term debt. Thus, it can be seen that Dialog Group Berhad have a good knowledge on how to improve their quick assets, since both years are in line with industry average ratio and also improving each year. The aim of the cash ratio is to determine the ability to quickly cover all current liabilities without selling or liquidating other properties. This tell analysts and creditors that the value of current assets in the company that could easily be transformed into cash. After computation of cash ratio for year 2019 and 2020, it can be concluded that both years have more current liabilities than cash and cash equivalents, since both years has 0.60 times and 0.84 times accordingly, which less than 1 in cash for every RM1 in current liabilities. It means both years are having insufficient cash on hand exists to pay off short-term debt. But Dialog Group has still managed to maintain the preferable ratio in both years 2019 and 2020, which are not lower than 0.5, because firm do not usually retain the same sum of cash and cash equivalents as current liabilities.
Thank you for the previous presenter, and now we'll be proceed into identifying, analyzing, and justifying the activity or efficiency ratio for Dialog Group Berhad in 2019 and 2020. To begin with, my name is Nur Shazad Izzati binti Umar Sharif, and I will be presenting on the activity ratio. The activity ratio or efficiency ratio will be used where in the financial ratio to show how competent it is the company to use its different operating assets is found in the balance sheet statement in order to generate sales, revenue, or cash. Not only that, this ratio also acts as a measurement to recognize the stability and fully utilized of the company's asset for their business process. First, we have inventory turnover rate. The inventory turnover rate is an efficiency ratio that shows how effectively inventory is managed by comparing cost of goods sold with average inventory for a period. This measures how many times average inventory is turned or sold during a period. So for the year 2019 and 2020, it can be seen that the turnover rate is the same for the 2 years, that is 20 times in a year. This indicates that the company effectiveness in its inventory management is relatively good, as higher numbers of inventory turnover rate in a year, where it can show that the sales of goods is in satisfactory level. In other words, the company took about 20 times to restock the goods for their business in the year. Next we have is average collection period. This average collection period represents the average number of days between the date a credit sale is made and the date of the purchaser pays for the sales. A company's average collection periods is indicative of the effectiveness of its accounts receivable management practices. To put another way, it is also used to inform the company on the time taken to receive payment from the customers towards sales made by the company. Therefore, the average collection period for Dialog Group Berhad in the year of 2019 is 142 days. Meanwhile, in the year of 2020, the company managed to collect its receivable in 180 days. This indicates that in the year of 2019, Dialog Group Berhad had administered a better way to collect the debts rather than in the year of 2020. This is because the lower the number of days to collect the debt is much better, as it will help to the company's operation to perform smoothly. Now we're moving on to fixed asset turnover ratio. For fixed asset turnover is the ratio of sales to the value of fixed asset. It indicates how well the business is using its fixed asset to generate sales. While a higher fixed asset turnover ratio is generally better, but if the fixed asset turnover ratio is too high, then the business firm is likely operating over capacity and needs to either increase its asset base, such as plant, property or machineries, to support its sales, or reduce its capacity. Therefore, for Dialog Group Berhad in 2019, they managed to generate 53 cents in every 1 ringgit of their fixed assets. Meanwhile, in 2020, it shows that the company managed to generate 90 cents for every 1 ringgit of their fixed assets. This indicates that in the year of 2019, Dialog Group Berhad have learned that the fixed assets are badly used efficiently to produce revenue, as the amount of 53 cents was much lower than 90 cents in the 2020. Furthermore, in the year of 2020 indicates that the company may need to invest more in capital expenditure rather than in the year of 2019 to achieve higher numbers of revenue. Next, we're moving on to receivable turnover ratio. The receivable turnover ratio is an accounting method used to quantify how effectively a business extends credit and collects its debt on that credit. The calculation made for the year 2019 has shown that the Dialog Group Berhad managed to collect the account receivable approximately 2.6 times in a year. But in the year of 2020, the number went down by 0.6, while the company managed to collect only 2 times averagely within a year. This indicates that Dialog Group Berhad managed to deal with collecting debt efficiently in the year of 2020, as the number are lower than the year before, meaning that they are able to collect only 2 times of the full payment of the year. Now we're moving on to the last ratio in the activity ratio, which is total asset turnover ratio. This ratio measures the ability of a firm to effectively use of all its total asset to generate sale. Therefore, as the result shows, in the year of 2019, the company managed to generate 36 cents of sales in every 1 ringgit from total assets. Meanwhile, in the year of 2020, the company managed to generate 32 cents of sales for every 1 ringgit in its overall total assets. This can be the indicator that in the year of 2019, Dialog Group Berhad managed to achieve a higher number rather than 2020, where it shows that the company managed to utilize more of the total assets well in 2019 instead of 2020. To conclude, the activity ratio is a measurement where any company can use to indicate on how efficiently is a company operations of using its capital or assets. From the calculation of the ratios in the year of 2020, Dialog Group Berhad managed to collect debt faster than in the year of 2019, but in other departments, 2019 has more useful engagement with the capitals and assets. Therefore, for Dialog Group Berhad has shown a declining growth in utilizing the capital or assets, as the ratios in 2019 indicates that they are able to generate more sales and revenue.
Leverage ratio is used to measure the extent to which the firm uses debt to finance its investment and also measures how well the firm can meet its interest payment obligations and the financial risks related to the financing used. There are three elements in leverage ratios, which are debt ratio, debt to equity ratio, and time interest earned ratio, also known as TIE. The aim of the debt ratio is to calculate the percentage of total funds given by creditors compared to the funds supplied by the owner's capital. After the computation of debt ratio for year 2019 and 2020, Dialog Group Berhad has decreased their debt ratio from 0.42 to 0.40. It is not a huge difference, but to be in a preferable ratio, show a good performance from the company in relying on their debt. The relative proportion of equity and debt used to fund the assets of company is the debt to equity ratio. More precisely, it represents the willingness of shareholder equity in the event of market downturn to cover all outstanding debts. After the computation of debt to equity ratio for year 2019 and 2020, it can be concluded that Dialog Group Berhad has decreased the leverage use from 0.72 times to 0.35 times debt for RM1 of equity. By this, the company's performance are proven well and good, since more funds from shareholders have been received instead of making debt with creditors. The objective of the time interest earned ratio, also known as TIE, is to calculate the ability of the company to pay interest. The TIE ratio is an indicator of the relative independence of a company from debt constraints. After the computation of TIE ratio for year 2019 and 2020, it can be seen that Dialog Group Berhad has decreased its TIE ratio from 10 times to 8.70 times. As long as the TIE ratio is positive, it is considered acceptable. Even though the company's TIE is not doing so well in year 2020, the company income is still 8.70 greater than its annual interest expense, and the company can obviously afford the interest expense on this new loan.
Hello everyone, moving on to the profitability ratio for Dialog Group Berhad in the year 2019 and 2020. For the first ratio would be the gross profit margin. After the computation of gross profit margin for year 2019 and year 2020, it can be seen that the ratio increased from 21% to 22.44%. Nonetheless, the cost of sales in the year 2019 represents 79% of sales, whereas in the year 2020, the cost of sales represent 77.56%. Thus, in terms of managing cost of sales and generating gross profit, Dialog Group Berhad performed better in the year 2020 than in the year 2019. Practically, the higher the gross profit margin is, the better, because it means that the company performed well in managing its cost of sales. Next would be the operating profit margin. The operating profit margin ratio is commonly used to analyze the company's productivity of its assets in providing returns to both of their creditors and stockholders. As for Dialog Group Berhad, the result of its operating profit margin had shown an increase from the year 2019 to year 2020 by a ratio of 19.35% to 20.32%. This means that Dialog Group Berhad had increased their power to generate operating profit on each ringgit of sales to 20.32% in year 2020. Practically, high operating profit margin indicates that either the company is selling the goods or services at a high price, or the company is controlling some of its operating expenses more efficiently. Apart from that, the net profit margin of Dialog Group Berhad shows an increase from the year 2019 to year 2020, with a ratio from 23.14% to 28.14%. Moreover, a rise in the net profit margin indicates that the company is more efficient in converting their sales to profit. Thus, the higher the ratio, the more effective the company is at cost control. That, based on the computation of return on asset for Dialog Group Berhad, it reflects a rise from 8.23% in the year 2019 to 9.01% in the year 2020. This means that Dialog Group Berhad was able to utilize their resources well in generating income. As illustrated in the company's income statement, Dialog Group Berhad generated a net income of 536 ringgit million in the year 2019 and 630 ringgit million in the year 2020. Thus, this means that in the year 2020, the company is more efficient since it made more income for each ringgit of its assets. Lastly, in analyzing Dialog Group Berhad's return on equity, the ratio shows a rise from year 2019 to year 2020. In the year 2019, the return on equity of the company is 14.13%, whereas in the year 2020, the return on equity is 15.27%. The increase in the return on equity shows that the company was able to successfully utilize their resources provided by its equity investors and the company's accumulated profits in generating income. In a nutshell, Dialog Group Berhad had successfully showed improvements in both margin ratios and also return ratios, which reflects the company's ability in converting sales into profit.
One of the suggestions for Dialog Group Berhad is to improve leverage ratio is by increasing the sales revenue and profits. By increasing prices, increasing revenue or reducing costs, this can be accomplished. To pay off existing debt, the extra cash generated can be used. This can help restructure the debt of the company. If a company pays relatively high interest rates on its loans to a large extent and the current interest rates are considerably lower, the company may attempt to refinance its current debt. This would minimize both interest costs and monthly payment, boost the profitability of the company's bottom line and its cash flow, and increase its capital stocks.
Despite the fact that there is a big decline in growth for utilizing the assets in the year of 2020, Dialog Group Berhad can collect that faster rather than in the year of 2019. But it does not in any way shows that the company may dwindle in the future. Thus, one of the recommendations for improving the financial performance of the company is to revise the financial ratios in the year of 2019 once more, as it would be an enhancement for the future references. In addition to this, the company might want to find a way to make use of their assets more efficiently. For instance, by measuring the output and decide if the outputs can be increased by the usage of the fixed asset without raising any numbers of labor costs. By reinstating a new quota of the output, it might help the company to gain more profits and thus would help to improve the financial performance by assessing on how the assets can be fully utilized in the future.
Furthermore, if the company is only holding unproductive assets, then it's time to get rid of them. The only reason why the company should invest on assets such as buildings, machinery, and vehicles is to generate sales. Each company has unproductive properties. It is time to get rid of them if the assets are just lying there, wasting money and not earning anything. If the funds are used wisely, the company may keep significant sums of cash on the balance sheet. Try to get it in a decent price. There are some properties on the market, however, which are not worth much and would be better off just disposing them for whatever they are worth. The cash reserves will go up after the sale, where the company will not have to pay for depreciation and the ratio will then increase.
Although Dialog Group Berhad has shown positive outcomes in terms of their profitability ratio in both of the years, it does not mean that success would remain throughout the years, as it is challenging for a company to maintain their financial performance. Therefore, one of the suggestions to improve financial performance of the company would be by maximizing cash flow by enforcing payment discipline. It is crucial for the company to be able to shorten their receivable periods in order to have an efficient collection system. One of the common ways to ensure that clients would pay in a shorter period of time is by giving them incentives for early payments. However, the company can also offer various payment methods such as via cash, checks, online banking, and so on. Apart from that, the company must also ensure that the security is being prioritized when opening up various channels to make payments. Therefore, when company is determined to manage their accounts receivable collection, it would contribute to the cash flow of the company, which leads to the financial performance of the company.